Hi there. Hello from wherever it is you're watching. Thank you for tuning in to watch another, episode of Crypto Made Easy, where we try to make crypto easy. We do understand that, blockchain is a complex, um, technology is a complex subject, and what we try to do would be to simplify every aspect of it. But essentially, what we do with this channel would be to simplify crypto, and crypto is a vertical of blockchain, right? I do think that crypto just summarizes or forms 10% use case of blockchain, right? But a lot of people are crypto, blockchain, crypto. Yes, blockchain is a vertical of crypto and not crypto in blockchain in its entirety. But we do understand, the power that crypto worlds, and we have pretty much dedicated our time to simplifying crypto for you, such that you are able to dissect and understand should you decide that it is a it is an asset class that you're looking to explore. Pardon all my stuttering and French. Right? Let's delve right to it. The subject or the topic for today would be 15 things you need to do, or 15 things you need to know to transition into crypto, or 15 things you need to use in transitioning into crypto. Whichever narrative sticks with you works for me. What I'm trying to say is, these 15 things, you know them, you are pretty much on your way to actively becoming a crypto native. Yeah. The first would be, don't put in more than you can afford to lose. If you know that you are putting in all your life savings, don't do it. If you know you're putting in something, right, that is going to potentially cost you a stroke, don't do it. If you're going to do so, if you're putting in monies that you owe debt somewhere and it's to relieve a debt, don't do it, right? Crypto is a risky investment, and I say this because I want to put that out there, right? Every investment class is risky, as it were. Real estate is risky. If you live in my side of the world, you understand that buying land, real estate, buying a house, whatever, it's risky because of the actors out there, right? Stock also is risky because of the some kind of volatility, but crypto is risky because it comes with a lot of volatility. So you want to pay attention to what you want to diversify into this new asset class. The second would be research thoroughly. If research was not important, I will not do 4 videos. I've done 4 videos on how to technically, fundamentally analyze every crypto project before you jump in, right? Before you invest any kind of money, significant, not significant, it's your money. Research, read the white paper, understand the team, understand the problem that the crypto project is trying to solve, understand how scalable it is, understand the upgrades around along the way, right? You want to make sure that you research thoroughly. The third would be something that I see a lot of people do, which it would be, the fear of missing out. Everybody's doing it, so you want to do it. Don't do that. Fear of missing out on crypto is typically abbreviated as FOMO, which is FOMO, which is the fear of missing out. If the only reason why you are investing in something is because you don't want to miss out because everybody's doing it, don't do it. The only thing you're going to miss out on is your money. You will lose your money. So it's that FOMO thing. Don't do it. Which is number three. Resist the fear of missing out. Number four would be, don't just trust, verify, right? We have a politician that is beloved, we all love him, and he will tell you go and verify, right? That's to show you the weight at which verification holds, right? Verify, verify the team, verify the project, verify the problem, verify the market and the opportunity, verify the milestones, verify the upgrades. Go to LinkedIn. Be petty. I am very petty. I'm sorry. When it comes to my money, I can be very petty and paranoid, and I can excuse you to be paranoid too. So please do your verification. Go and verify. Right. Number five would be beware of the unit biases. The fact that a crypto project traded for $1 and then Bitcoin is trading for $20 as at $20,000 today. As at today, does not mean that Bitcoin is expensive and that one is cheap. Beware of that unit biases, right? Bitcoin is Bitcoin, every other coin is every other coin, right? So please, not all coins are created equally. So you want to be very sure, and you want to be careful about unit biases. The sixth would be, please, can we keep the past in the past, right? Keep the past in the past. The fact that Bitcoin was one time trading for pennies or was one time trading for almost nothing does not mean that that's what it's trading for, right? It has grown, and it grew up to 60K, and then we are in the bearish market. It's now around 20K. It does not mean that Bitcoin is not Bitcoin, right? So just keep the past in the past. Keep the past in the past. It's something that you have to normalize doing. The seventh would be, if it's not your keys, it's not your coins, right? You cannot be giving access to your private keys to any third party. Don't do it. We have on Instagram a lot of exchanges, or I mean, maybe I don't know. They call themselves exchanges. They are the exchanges that that are very centralized and very regulated, that would come up with the whole KYC thing. Every other person that's telling you or asking you for access to your private key might just be not trustworthy. So don't do that, right? I don't think that cryptocurrency is like a bearer asset like cash and jewelry. So you know how my jewelry is my jewelry, my cash is my cash. I have it, I have it. I don't have it, it's stolen. Same thing with crypto, right? You don't want to give out your private keys. You do that, you lose everything. Number eight would be, you can buy a fraction of some kind of tokens. For instance, Bitcoin can be divisible, or rather is divisible in, I mean, up until 8 decimals. So you can buy a fraction of a Bitcoin. I even think that you can buy a fraction of an Ethereum. And then there are some digital assets that you can buy a fraction of, right? So, I mean, don't wait until you can buy one Bitcoin. So I was in conversations with a certain community that you would think that they know, right? But the conversation led to a point where we started converting Bitcoin in Naira fiat, and I kind of said that Bitcoin now stands at about 8 point something million, or about 9 million, and they were like, "What? Bitcoin 9 million?" I'm like, "Yes, yes." You see, a lot of people get discouraged because they say, "Oh, I don't have 9 million naira to buy Bitcoin." Start by buying fractions, right? Start by buying fractions. You can actually build up until you get one Bitcoin, but you can start more like investment, right? Start by buying a fraction or two, one Satoshi, one bit cents. Start by doing that. The ninth would be, understand the tax consequences and the gas fees. For all my watch, I mean, people who has watched from, or who are watching from the US, right? For several reasons, you've come up to me to say that, what are the gas implications? What are the tax implications? First, I think the IRS consider crypto property not currency. So I think for tax purposes. So understand the dynamics around that, and just fully do your research around that before you decide to invest in any kind of asset class on, I mean, digital asset class. The 10th would be, buy using, dollar cost averaging, and don't obsess about the price. Stop obsessing about the price. People who are obsessed about the price when, yeah, I mean, the price of Bitcoin when it was at $100 have not still bought when it's 20K, because Bitcoin went to 60K and crashed. And then they're still obsessing about the price because it got to 60K and then it crashed to 20K. One thing is constant about the market: there will be bear runs and there will be bull runs. Every market would have bear runs and bull runs. The stock market has bear runs and bull runs. The real estate market has bear runs and bull runs. And guess what? Inflation is really not helping anything. So do not obsess much about the pricing. The 11th tip would be, Learn the lingua. Bitcoin, BTC is Bitcoin. Learn the lingua around blockchain, right? There's a lot of it. FOMO, for instance, FOMO, fear of missing out, right? Altcoin would be alternative coin, right? What is Bitcoin hashing? DeFi would be decentralized finance. Understand these things. Ignorance is not an excuse. It has never been an excuse, right? It's even there in the law. Ignorance is not an excuse. So please try and educate yourself. The 12th would be do not neglect tech skills. There is no way you can be a crypto native without being a tech junkie, or maybe not a tech junkie, without being tech savvy. Understand, tech, right? You need to have like chops around bite-sized knowledge around crypto blockchain to fully understand the blockchain system, at least to have a baseline understand or base understanding of what the blockchain system is or how it works. The 13th would be open to innovation and adaptation. It goes without saying. So when I transitioned into crypto, you see, Ethereum was nowhere to be found, right? And Ethereum right now is regarded as the second most valuable crypto by market capitalization. What does that tell you? Markets will evolve, right? The trends would evolve. So you need to be open and, be very adaptable. The 14th would be we are all early. We are all very early to Bitcoin. We are all very early to crypto. We are all very early to blockchain. Blockchain is in its very nascent form, especially for us here in Africa. A recent research shows that the global blockchain market size will be upwards, and by 2025 it means it will upwards $60 billion. I think it will be more, but the research says what it says. And then it now represents a compound growth of a 64.9 percent compound growth, right? By most accounts, blockchain and cryptocurrencies are still in their infancy. So the market's early. Don't think that anybody knows it or anybody's an OG. And then the 15th would be master your crypto key phrase. When you open an account, especially around regulated, or let me not say regulated, centralized exchanges, and you download your hardware wallet. First you download your wallet. First you're given a key phrase. If you cannot master it, screen much keep somewhere for safekeeping. You see, when you lose your key phrase, right, your crypto key phrase, I kind of liken it to throwing away the key to a bank vault. So you don't want to do that. And I think that brings us to 15 tips to walking into crypto. But I will not leave you at that, right? I will leave you with three keys to succeed with crypto. The first would be you want to stick within a risk management. Never, ever, 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 ever overexpose, right? Stick within what you are willing to lose, really. And I would say that for every investment class. The second would be buy low, sell high. Buy low, sell high. A lot of you come to me and ask, Linda, when is the right time to sell? Or when is the see, wait, so as much as I think that investment should be for the long term, as monitor your investments, right? As you record your gains, pick your gains and then trading again. Pick your gains and then trading again, especially for you, the gen traders. And then the third would be patient. Be patient. You need to be patient, right? Get busy. Stop patachilizing your crypto wallet, or stop patachilizing the crypto market. Do other things. Can you do other things? Yes, you can do other things. Go on a vacation, take a job, do other things. Crypto is crypto, it will always be crypto, right? Get busy. But I'll leave you with this. I think the goal at the end of the day would be that you would need, and you would essentially need to stack up to the point where you have upwards or up to one Bitcoin. And I'll leave you by saying, see, the bearish market does not last forever. There's the bear run and then there's the bull run, right? There will always be the bear run and there will always be the bull run. We've come to the end of this session. If this video blessed you, I would say like, share, and please give us a thumbs up. And let me tell you why I think you should share. I think you are sharing because that's your own part, right? That's your own part. We need to pass the message round. We need to emancipate Africans from untold or told unemployment and told poverty. Thank you. It's been a moment. It's been a while, ideating with you. I look forward to speaking with you next week. Until then, bye bye.